Well, everybody. This is Jason Matthews, you guys' personal financial advisor. Right now, it's a crazy day on the stock market, and I want to talk about the reason why, what's happening, so you really have a better understanding on what's happening in the economy, so you make the best decision for yourself, your family, your business community. So when we look at the stock market today, right now, as we see, the Dow Jones average, which your 30 biggest publicly owned companies as we speak, is down over 700 points. It's changing as the second goes, was down over 700 points, down 2.2%, and it's crazy. The S&P 500 is down 2.45% for the day. The Nasdaq is down over 3%, and then when you go to the crypto space, Bitcoin is down over almost 3.5%. Ethereum is down 6.2, over 6% for today. And the reason that we're having this big sell-off is that the inflation, the CPI inflation rate, the interest rate that the Federal Reserve announced for inflation, which is the consumer price index on how much people are paying, inflation rate went up to 8.6%. Last year, there was talk, or not last year, but last month, there was talks about inflation hitting its peak at 8.3, as it went from 8.5 down to 8.3, but now it's scooted back above what it was in March. Now, with that being said, what we're expecting, or what people are thinking, is that the Federal Reserve, the people who have the power to print money, I always see the most powerful people in the world, looks like they are going to raise interest rates during the June 14th and 15th market meeting. And what they're going to probably do is raise it at half a point. Was expected that they're going to raise it for June. But some people, if you listen to CNBC, Wall Street, some people are thinking that the Feds made a verbal error because they took off the 0.75% basis point increase, or even 1.1% based off past comments. And right now, the Federal Reserve could raise rates even at 0.5%, where we now are going to expect during the June 14th and 15th meeting, and possibly again in the July meeting that they have every single month to curb inflation. The reason why you have interest rates curb inflation is that what they're trying to do is slow down inflation, because people are still buying goods and services, and the cost of goods and services prices have been up. We see that with energy prices. We see that with food prices. We see every time we go to a grocery store about prices are increasing. So to curb that, they want to raise interest rates. When we raise interest rates, it costs more to service that debt, which means that since it costs more to service that debt, that means people are going to pay more for housing. So the housing supposed to drop, the housing price is supposed to drop. People want to curb it for how much they spend when they're going out, because now they're paying more for credit cards, and supposed to slow down the economy, which is supposed to lower the cost of everything, the goods and services that we purchase. That's the thing. And a lot of people are saying that because they were so late to the game, raising rates, that we're behind on the curve on it. It's going to take a while to build up to fight inflation. But right now, because of that, we know a lot of companies who are very, very needy cash have what they call high burn rates, which means they're going through cash like this, who have horrible cash flows, are having the most turbulent times. And we're seeing that based off of tech, because if you're buying everything, your goods and supplies, and you're only buying your basic necessities, you're saying maybe I don't need to advertise on Facebook, or I don't need to buy the latest toy and gadget because I'm spending money on my toilet paper, my food, and my gas, and my energy prices, and I can't afford to buy the luxuries of life. At the same time, a lot of tech companies, especially newer ones, have horrible cash flow. And because they have horrible cash flow and burn rates, because they don't produce cash, they're in trouble, because now it costs them to service more debt, which means we're seeing a flow of more tech is having layoffs, hiring freezes, and so on and so forth. So there's really is a move forward. And what we're now seeing is the Federal Reserve want to make a nice soft landing on inflation, but people are scared that it's going to be a abrasive hard landing coming forward. We simply just don't know. I was talking to a friend today where he's seeing a lot of price reductions in the real estate market. He's on the commercial side of things. Shout out to Steve Peterson on the commercial side of things, but he's seeing that as well. I want to say for savers, this is a great time as we're seeing, once again, saving rates go up. We're seeing annuity rates. I haven't seen annuities at 4 or 5% for fixed annuities in a very long time. And we're seeing that. We see the 10-year yield has went up above 3%. So for savers, it's looking better for savers as they don't have to take on so much risk and they're moving their assets towards safety. But for tech, companies are not doing, they're doing bad. But my companies in energy, I was talking to one of my clients who work for Marathon Oil. They're killing right now because of the cost of energy, the supply and demand of energy, and the cost of energy going up right now. So I won't tell. So I always want to tell people is make smart decisions, make calculated smart decisions, and make it the best for you can make the adjustments for yourself, your family, your business, and your community, as this could be an opportunity for a lifetime for the people who are educated and astute towards these decisions on how to take advantage while other people are running scared. I really do think, in my personal belief, that we're probably in the first inning of this inflation thing, based off of me studying the 1940s and 1970s, when we had times of inflation. It took a long process. I think we're only in year one for it. And I think this might carry on for inflation for a while, because you print it. This is what happens when you print all the money you had in just in a 2-year period. With that being said, I hope everybody have a good day. I hope this helps you out. If you get anything from this, please subscribe to our YouTube channel. Make sure you share with your friends, as we want to educate as many people as possible on what is happening in the marketplace. Talk to you later.